now put the spotlight on the kind of moves that we are seeing in the oil and the yellow metal market. Remember, yellow metal has given up most of the gains that we have seen over the last few trading sessions. In fact, it is now trading near that $4,000 per ounce mark in the global market. Meanwhile, as far as Brent crude is concerned, that is trading near $63-$64 per barrel mark. It is gaining for the second consecutive day today. But remember, Brent crude is still down nearly 17% on a year-to-date basis. But to understand what the outlook is going forward, we now have Mr. Manav Modi, who is a research analyst, precious metals, Motilal Oswal Financial Services, now joining us. Manav, thank you so much for taking your time out and joining us here in ET Now. Let's get started and let's first talk about gold, right? From the highs that we have seen over the last few days, from $4,300, $4,400 per ounce, it is now corrected. Although today it is gaining some momentum of late, the up move that we have seen has softened up quite a bit. If you can take us through what your expectation is going forward, and do you expect gold prices to now largely remain range bound and most of the up move for the year is now behind us?
Hello, hi. Thank you for having me. Definitely, as you mentioned, we've seen almost a $400-$500 correction, and we were very close to the $3,800 mark on the COMEX, which is a very important support. But we were just shy of those, and once again saw those recovery coming in. I think the base fundamentals that we have been talking about till now still sticks out, and the story is still strong enough. But it's just the market equilibrium and the fundamentals, especially two major things that have happened and led this fall is the US and China tariff discussion and the trade talk discussion, and the second being the rate cut uncertainty once again hitting the market, bringing the bulls to liquidate a bit from the higher side, profit booking from the higher side, and gauging the market that if really the US China trade talks goes through and the rate cut doesn't happen in the month of December, like Governor Powell is mentioning, that could keep the prices a bit range bound. But definitely on the positive side, we still have the ETF flows, the overall demand still holding well, central bank is still buying, we still have the US shutdown led the impact growth and the inflation hedge related buying coming in. So I think all these factors continue to support the prices. 3,900 $4,000 is a strong zone. Definitely it could be a range bound, but on the higher side, 4,200, 4,500, the recent highs is where we see as of now.
All right, so 4,200, 4,300, that will be the target price. But for now, you expect gold prices to remain range bound at least for the rest of this calendar year. And what about Brent crude then? We have seen quite a bit of correction on a year-to-date basis. Also, OPEC Plus came out with its announcement a few days ago where it is expected to increase output for the next 2 months, but perhaps slow down in January to March period next year. Your thoughts on where oil prices are headed and the kind of impact of demand supply mismatch that we are expecting going forward?
Yeah, I think definitely crude for the entire year has been the play of demand and supply dislocation where demand was a bit missing from China, from US and elsewhere, but supply side risk was quite high as OPEC Plus was continuously boosting the production. We continuously saw till December month the production increases are there, but as per the recent announcement, definitely the first quarter or the first 3 months of 2026 will be a pause for this production rise. A very big story, a very big boom on the supply side, especially if we see this last 3 months as well. That is the October, November, December. The production increase is not as much as the market were expecting, so that also is a supportive factor for prices. I think on the positive side, US SPR buyings and China SPR buying is continuously rising on an aggressive basis. China, the numbers are not very official, but I think they are buying on a very aggressive basis, and that demand could continue to push the prices higher along with the geopolitical tension. So I think the downside looks a bit limited from crude oil perspective. I think on the Brent, if we are currently at 63, we could see about 61, 61 and a half kind of a lows. But on the higher side, definitely the price targets look higher on the domestic front. 5400, 5420 is a good level, a good support resistance zone. But I think 56, 5700 looks an immediate levels to watch out for on the domestic front.
All right, so understood. So that's your view when it comes to oil. And what about industrial metals then? Any particular industrial metal that you are bullish on? Zinc, lead, copper, aluminium, anything in particular?
Yeah, I think copper and zinc are in my focus. Definitely, aluminum was a bit lackluster till now. Since the last 2 days, it is picking up some pace. But I think copper and zinc could, lead the way higher. Especially copper, the way it has rallied by more than 20-25% YTD, sustaining around the 1,000 rupees on the, MCX, the domestic, and about $10,000 on the LME. I think on an immediate basis, there could be some bit of a correction till about $10,200 on LME, or say 990, 995 on the domestic front. But on the higher side, we could see once again the recent highs, that is 1,025 rupees on the domestic front. And if that is taken out, we could be heading higher towards 1,100 rupees as well on the domestic front.
Understood. So that's your view when it comes to industrial metals. But Manav, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is when it comes to gold.